Hello, everyone. This is Bill Even, your CEO at the National Pork Board in Des Moines, Iowa, welcoming you to the September Pork Producer webinar. Our focus here today is going to be on the latest USDA Hogs and Pigs report, and we'll go ahead and get started. Nate, do you want to go to the next slide, please? So first, as we start off all of our webinars, is the antitrust statement for the National Pork Board. We know that there's a lot of information that will be shared here today, and the intention is that we uphold the highest priority to compliance with both the letter and spirit of the nation's antitrust laws. Nate, would you go to the next slide? So we do have a setup today that will allow you to ask questions. So there's a live Q&A section as you look at the drop-down box on this slide on the right-hand side. At the end of the call, we'll do live Q&A, and I'll be moderating that with our panelists here today. So you can submit your questions in the chat box as you see listed on this slide. In addition, we are recording this webinar, so you'll be able to hear it with other colleagues in the industry if you're not able to join today. Next slide. So I want to introduce our panelists here today. First off, we have Dr. Steve Meyer, who's going to go through the numbers from the USDA report. We'll have Dr. Ron Plain, Mr. Len Steiner, and Kevin Bost are also going to provide commentary on how they see the USDA report numbers shaking out. So with that, I'm going to turn it over to Steve Meyer to start us off. Steve?
Good afternoon. Thank you, Bill, and good afternoon, everyone. Let's get right to the numbers in this most anticipated USDA Hogs and Pigs report. First, all hogs and pigs, 79.099 million. I believe that's record large, up 0.7% from a year ago. The analysts had expected that number to be down 0.2%, and I'm giving you the average of analyst estimates as surveyed by Erner Berry earlier this week. The breeding herd at 6.333 million head, 1.5% lower than a year ago. Analysts had expect that number to be down about 2.6%. Kept for marketing, 72.766 million head, up 0.8%. Analysts had expected that number to be up fractionally, just 0.1%. On the weight categories, and this is what gets interesting as it did in June, under 50, 22.559 million head, down 3.5% from last year. Analysts had expect that number to be down 2%. 50 to 119 pounds, 20.490 million head, down 3.5% from last year. Analysts had expected that number to be down only 0.3%. 120 to 179 pounds, 15.547 million head, up 6.1%, and analysts only had 1.5% on the year-on-year growth on that category. 180 and over, 14.169 million head, up 9.8% from 1 year ago. Analysts had expected that number to be up 2.6%, so large deviations to the top, to the upside on the two heaviest weight categories. On farrowings, June-August farrowings at 3.180 million head, down 2.9% from last year. Analysts had expected that number to be down 4.3%. September-November intentions, 3.118 million head, down 4%. That one is close to analysts' pre-report estimates, which were down 4.6%. Dec-Feb intentions, 3.111 million litters. Notice how consistent those farrowings and intentions are with one another, almost the same number, down 1.5% from a year ago. Analysts had expected that number to be down 3%. The June-August pig crop at 35.115 million head, down 3.4% from last year. Analysts had thought that number would be down about 5%. And finally, the June-August pig save per litter, 11.04, down 0.6%. And I think Lynn's going to give us a perspective when the last time that happened was. Analysts had expected that number to grow by 0.1%. Bill, those are the numbers. Let's hear what the analysts have to think.
Thanks very much, Steve. And first, we'll go to Ron. Ron?
Thanks, Bill. everybody looks forward to the pig report, mostly for the new numbers. One of the things I always look at is old numbers and revisions. USDA has a very good history of revising market hog numbers and past inventories to match up with hog slaughter, because that's the important thing that most everybody's really interested in these pig reports, is how many pigs are out there and how much pork are we going to have, and the implications that have for price. But in this case, very few revisions. USDA did increase bearing intentions June, July, August quarter, and September, October, November a bit, but no changes in the market hog inventories in the past reports, which is interesting. The slaughter during the last quarter has been far lower than implied by the June inventory reports, about 1 million fewer hogs slaughtered compared to what the 180 and up inventory group. And if you look for the whole quarter, over 1 million fewer hogs slaughtered than implied by the March numbers. Why that was, it probably reflects reality because of the COVID problems that's created, the labor issues for workers, both on farms and particularly in packing plants. We haven't had the workforce to handle and move as many pigs to market, and producers have very often intentionally slowed growth rates because of concerns that the slaughter capacity wouldn't be there. So the likelihood is high that USDA numbers are going to come in large relative to slaughter. I'm just not sure that what these numbers may be still too high. The 180 pound and up inventory on September 1, up 9.8%. Slaughter thus far has been basically evened down a fraction. So from the point of being able to look at these heavyweight inventories and accurately anticipate slaughter, I think you're going to have to reduce what we're going to actually kill off of what USDA's numbers implies available out there. That's my opening comments.
Thanks very much, Ron. And next, let's go to Len Steiner. Len?
Okay, the supply is what it is here. We're having a little trouble understanding how these roughly 1.5 million hogs keep getting moved forward in that 180 pound and up category. The producers on this call must be very good at regulating the diets to make that happen. It looks a little bit like magic to us, and we're having a little trouble believing that they're all going to overwhelm us in the fourth quarter. So if you look at these numbers, you'd think we should be bearish on prices. The other thing, what's really important is the amount of pounds that we present to the American public for determining the price. On a per capita basis this year, we think that pork supplies actually will be down in spite of the fact that we'll have record pork production. And the reason is exports. Exports this year, at this point in time, we're expecting to be about 27% of all the pork produced in the United States will leave the U.S. shores, and that compares with about 23% a year ago. So big increase in export business. Cleaning up the supply, and if we don't get overwhelmed with these 180 pound and up hogs, if we're able to move those, continue to be forward until we start to see some of the whole after December, we expect a little higher prices in the meantime, and that can be changed. Primarily, China is our biggest card at this point in time that could really mess this up. So everybody's got to watch for the China card. That's it.
All right, thanks much, Len. And next, Kevin, what are your thoughts?
Well, I've got some similar thoughts. as both Ron and Lynn. But one of the things that, well, first of all, I too have a hard time understanding how the throughput could be slowed down quite this much. Some I can understand, but I think that, you know, we just have to be kind of careful about how we forecast the kills, the hog slaughter, based on the pig crop numbers. You know, the rules have been changed a little bit temporarily, I think, but one real issue I think that this raises again is that the issue of hog supply versus kill capacity. And with the spring pig crop having been left unrevised, and with the market hog inventories having been left unrevised, there clearly could and should be a bigger hog supply than we have the kill capacity to handle. That practical kill capacity being somewhere in the neighborhood of 2.7 million per week. Well, if we were looking at normal growth rates, and if the spring pig crop is correct, then we would have to be killing something like 2,750,000 a week in October and November to handle that spring pig crop. Well, you know, we're not going to do that, partly because of the slowed down growth rates and partly because the labor constraints won't allow the packing industry to produce that many a week. So the other thing is, and Lynn touched on this, and that is that what we're looking at here, we're looking at a rate of hog slaughter that is constrained by the kill capacity and not by the hog supply, which means you're not going to do 2.7 million a week after week for any length of time this fall. And with the exports, if the exports are nearly as good as I think they are, then the net domestic pork supplies are going to be down 8 to 9% from a year ago, despite these larger hog inventories. So that, I suppose, is about all I wanted to say as an introduction.
All right. Well, thank you, all four of you, and thanks for your initial comments. We've got some questions starting to come in here now, and I'll read off the first one, and this will be open mic night, so you folks can all chime in and give your comments. So here's the first question. There are anecdotal reports of producers deciding to leave the sector. Does the data in today's report provide insight on that possibility? And if so, to what extent? So kind of in a nutshell, questions about, are we going to have producers exit production? And how is this Hogs and Pigs report going to either slow or accelerate or reverse that trend? Open it up for anyone.
Well, I would propose the breeding herd being down indicates that some people are leaving the industry. And, you know, how quickly they do that and how far they carry it forward remains to be seen at this point in time. But the magnitude of the sow slaughter the last several months, along with the reduction in the breeding herd, which, you know, the combination of how many gilts you hold back and how many sows you send to market is indication that yes, there is some reduction in the size of the industry taking place at this time.
I would agree with Lynn on that. Hog industry's always reacted to profitability. This has been a very tough year for a lot of producers financially, and so you should expect to see hog numbers. And as Lynn mentioned, sow slaughter, I think it's been up every week of the year compared to a year ago. So yeah, yes, I think we unfortunately are losing hog producers during this stressful time.
Anybody else want to weigh in on that?
Nope.
All right. I'll go to the next question. Do the economists forecast the cutout value dropping as we regain plant capacity? So how is the cutout going to perform as we have regained plant capacity? And you may want to talk a little bit about the German ASF situation as well.
Well, I can make an attempt at that one. Recovery in the plant capacity is, I think, only going to be a major issue this fall. In other words, it looks to me, based on this report, that once we get past the first of the year, the hog supply is going to be smaller than the kill capacity. I don't think the kill capacity is going to recover materially this fall. I think it's going to take longer than that. You know, these are major changes that are taking place in the packing plants, and you know, part of the restriction is labor, which eventually would theoretically come online, but not that fast, I don't think. The cutout value is not the same as the hog market, of course, as you know, and so I don't think, you know, if we're limited to killing 2.7 million per week, no more than that, possibly less, then there is no downside potential in the cutout value basically from where it is. I'm coming up with numbers that are 86, 87, 88 for Octave Dees, and not much below that in the first quarter. Kill capacity would have a greater impact on the hog price than it does on the cutout value.
Thanks, Kevin. Yeah, I think tangentially related to this, I'll open it up to you. The news here a couple weeks ago of the finding of the ASF positive wild boar, and now boars plural, in eastern Germany next to the Polish border. Certainly saw the market as well as the cutout behave there. I'd like to get your thoughts from any of the four of you on that and impact on the cutout.
Well, this is Len Steiner. I think the important thing is not a surprise that we found a wild boar with ASF in that part of the world, because you know, next door in Poland they've had it. The issue is that Germany was the second biggest supplier of pork to China, and China cut them off. And so, you know, where are they going to get additional supply? As they look at, they can't go to Spain, their number one supplier, because I think they've been shipping as much as they can to China. And so it backs up that the next place they're going to come is the U.S. And so they're going to compete for Japanese exports to Japan or to China with the American consumer who wants the pork more. And economy in China is probably better than most of the rest of the world. I mean, the rest of the world is all in a recession, and China seems to be coming out of it faster than anyone else at this point in time. So if they've got money and they like pork, they're probably going to outbid the American consumer for whatever they want.
Thanks, Len. Ron, any thoughts there?
Well, yeah, I mean, exports have been one of the key factors in hog prices in the U.S. for quite some time. We've done fabulously well. We're up almost 25% in the first half of this year on exports compared to a year ago. Huge chunk of our production goes into exports, and when other countries have health problems or issues like African swine fever, it makes U.S. pork a little more attractive alternative. So I'm expecting continued strong exports in the coming months and quarters, and that's going to support hog prices.
Thanks, Ron. Kevin, any comments on that, or we can go to the next question?
Just quickly, I agree with what they're saying. Germany's, best I can tell, had been shipping about 35 million pounds of pork per month to China, which is no small deal. And And Korea on top of that, Korea shut off the German pork supplies as well, and that was an additional 5 to 10 million pounds a month. So, that is a significant amount. Nobody knows, of course, how long China will keep those restrictions on Germany. It could happen next week, and they may be still may drag out until next year sometime. I have no idea, but it is a significant quantity.
Thanks, Kevin. So the next question is directed for Steve Meyer. So Steve, heads up, you can turn your camera on. Steve, can you give us some information and elaborate on the new CME cutout contract that's proposed?
I can tell you a few things about it. The proposed contract, as far as we know, will be listed this fall sometime and may actually have a December contract as its first listing. It will be 40,000 pounds of pork carcasses based valued at the cutout value. The CME group has published a weekly cutout value index for several months, probably a year and a half, 2 years. You can go on their website and see the historical data on that, and it will be cash settled to that cutout value, which is basically the 602 cutout value weekdays. It would correspond to the 610 weekly cutout value report from USDA. So it will be listed electronically, and we'll have options with it, the same as the current lean hogs contract. So I guess I'll ask anybody if there's anything else they need to know about it. That's all I'm thinking of right at the moment. But we will trade for the same months that the lean hogs contract trades, 8 months out of the year. That should start again, like I say, this fall. We haven't heard a date on that yet.
Thanks, Steve. And any thought on how those two contracts will interact with each other? How will one affect the other? You see one gaining in popularity, one dwindling in popularity?
Well, the market's going to decide that, Bill. I mean, historically, the cutout value and the lean hog index were pretty highly correlated. Now, that correlation has gotten less the last few years. So at one time, I thought that it would be kind of duplicative to have a cutout value contract when they were very highly correlated. And my concern was that introducing a new contract might rob volume and open interest from the lean hog contract and make that a less liquid contract, one that's harder to get into and out of. This reduction in the correlation between the two says that they're more independent. And so, like I say, the market's going to decide which one, and I think that can be used for two different purposes. And if that's the case, and can be effectively, if I'm right on that, used to hedge hogs and to hedge cuts or the cutout value in the wholesale market, and maybe manage the spread or manage basis even in some cases on this, then I could see that they'd both be quite useful. So it all depends really on how the market views it, and of course how many people actually go trade a new contract. CME introduces a lot of new contracts, and most of them fail because we don't have any track record, and so people that pay spreads and those kind of things on the spec side don't have a lot of history to base their decisions on, and so it's hard to attract volume into that. Hopefully these two might be close enough that the history of the lean hog contract will help us some on that.
Thanks very much on that, Steve. So the next question I've got is going to kind of lead into the right now the closeout, and that's around your price projections. So we'll go around the horn here, and it's really bottom line. What does today's USDA hogs and pigs report mean for producers as we look through the rest of the year and into 2021? And Ron, I'm going to start with you, and give us your down and dirty on what you think this means for our farmers.
Well, Bill, number of hogs is headed down. it's been a tough year, and so the industry is responding with the less production. Fewer hogs is going to translate into less pork. Looks like demand will stay strong to grow, so higher prices next year than this year. So there's silver lining to this dark cloud. How long we stay down will depend on just how good prices are. Eventually, producers respond to profits and we'll see some increase. There's not really a whole lot of indication of that on these numbers.
Thanks, Ron. Next, Lynn, I'm going to go to you. And if you're not speaking, I'll have you, everybody, make sure you mute your microphone. Thanks. Lynn, you're up.
Yeah, I agree with Ron that we expect higher prices in the fourth quarter, counter seasonally. And most years you'll find the fourth quarter is cheaper than the third quarter. And this year we've got them up about $11 a hundredweight. We're guessing that the third quarter is going to come in about 55.27 for the CME index on average, and we've got the fourth quarter at 66.67, up a little over $11. For the year, we've got prices in 2021 about almost $11 higher. This year it should average about 59.04 for the CME index. Next year we've got it plugged in right now at 69.83, with first quarter at 68.67, second quarter 75.67, third quarter 73.33, and then the fourth quarter of next year, following the seasonal pattern, down to 61.67. So a little, this fourth quarter is going to be an oddball, but good for the producers. And next year should give them a little higher prices, and hopefully that slows up many people that are exiting the industry at this point in time. But we'll find out. Back to you, Bill.
Thanks very much. Thanks very much, Lynn. And you base your prices on what?
It's a CME index.
Got it. Perfect. Thank you. So, Kevin, I'm going to go to you. Give me your bottom line, and then let's run through your projections, and Ron will come back to you and pick up your projections next. Kevin?
Bottom line, I'm using the same CME lean hog index that Lynn is talking about. And here, I didn't go out through the fourth quarter next year, but fourth quarter this year. I got these monthly here, October, November, December, 68, 66, 69. So that would be about a 68 average for the fourth quarter. Same average I come up with, 68 roughly in the first quarter, January 67, Feb 71, March 67. And then third quarter, in the summer, second quarter, that's spring, isn't it? Second quarter. April 73, May 79, June 83. So that averages out to about a 78, we'll call it, in the second quarter.
Thanks, Kevin. Ron, do you want to tell us your price projections and what market you're basing them to?
Sure thing, Bill. I'm going to give Iowa, Minnesota negotiated prices, so it's well below the price series that Kevin and Lynn used. Fourth quarter this year, somewhere around $56 on carcass prices. A little bit higher, 57 in the first quarter of next year, then 62, give or take, in the second quarter, around 60 in the third quarter, and then dropping to around 51 in the fourth quarter of next year.
Thanks, Ron. Looks like we had another question just come in. I'm going to scroll through and read it. So bear with me here. So Iowa, Minnesota inventory over 180 pounds is supposedly up 9% over last year for Iowa, and 37 up for Minnesota. How can that be? Minnesota 1530 versus 1110 last year. That looks to be nearly impossible. Any thoughts on that? So the question in your question box, if you're looking at it, gentlemen, is the discrepancy in inventory in some of these pigs over 180 pounds. I don't know if any of you had time to
I haven't
delve
gone
into
through that detail. I wouldn't be appropriate for me to comment.
Okay. Has anybody else poured through the report in that level of detail yet?
Sorry, Bill, I
I
haven't
have not
looked.
state by state.
Okay. So, well, thanks for that. I'm not seeing any other questions on that. One thing that I want to remind everybody that's listening in on the call here is you should have a survey in your inbox that's coming from the Pork Checkoff. And that really is the information we're going to send to the board of directors as they direct your checkoff dollars here for 2021 as you put together the budget. So I'd ask all of you to make sure that you have filled out that survey and let the board of directors know your priorities and the money's getting spent where you want. We've just had another question come in, so hang tight. The question is this: how does sow inventory reduction translate into fewer pigs? Is there a good rule of thumb that we should be using when we're looking at sow inventory versus the pig crop?
Well, sows generate about, what, 24 pigs per year in that vicinity? So if you lose a sow, you lost 24 market hogs, basically.
Yeah, probably at a minimum. I know there's a lot of folks that are running 30 or even better now pretty consistently here in the industry. I just ask each of you, what's your rule of thumb on sow per pigs per litter per year? Ron or Kevin?
I've always assumed that the average has made its way up to, well, not always assumed. I mean, recently I've been assuming that that average has worked its way up to about 28. I may be too high on that. Ron, am I?
National average data always lags a bit behind. I think more in the 26, 27 pigs per sow per year for national data. And the other thing is, if you calculate that per sow per year, you're going to use the breeding hog inventory. And one of the things to notice is that very often the breeding herd inventory isn't as good a predictor as future hog numbers as the pairing intentions. And in this report, if you look, September, October, November pairings down 4.5%, intentions down 4.5%, for the winter down 1.5%, and the breeding herd down 1.5%. So if you just you get fewer litters out of the pairing intention numbers combined than you will looking straight at the breeding herd. And so a little larger breeding herd from the data series means a little bit lower pigs per sow per year. So maybe that's why I'm under Kevin's number a bit.
Thanks, Ron. Just had another question come in, and I know you guys said you haven't had a chance to delve into the state-by-state data very much, but we'll take a swing at this. And the question is, generally looking at your state-by-state data, how do you rationalize the increase in market hog inventory, certainly in Iowa, Minnesota, that were hit pretty hard with emergency depopulation, when reports from the producers themselves are indicating they're current? So to repeat that, as you're looking at the increase in market hog inventory here in I would say, kind of the central Midwest, Western Corn Belt, and producers are indicating that they're current. I don't know if that's a comment on the accuracy of the USDA report or not, but I'll let you folks see if you want to answer that.
Well, Bill, that relates to what we started talking about. These heavyweight inventory numbers look very large relative to corresponding slaughter. USDA on trying to work through these numbers, and they work numbers that come from producers from the survey, but trying to figure out just how many hogs are out there when we know that the slaughter is likely to be far less than the number because of slower rates of gain.
Thanks, Ron. Len or Kevin, any comments on the rationalizing?
My
Yeah,
experience
frankly, I think frankly, I think it does. It does cast some doubts on the the USDA estimates. I mean, you're talking about a big discrepancy with the market hog inventories in the front end being up 6 or 8 or 9 or 10% like they were in June, and the difference between that increase in the inventory and the increase in the kill is really wide. So not only for that, if here, I guess I'll go ahead and say it. It looks pretty doubtful that the USDA numbers are really accurate. They might have overstated them some, because you would have to have a massive slowdown industry-wide, all the major states, in order to have slowed down that many hogs, I think. So there, I said it.
Len, do you have any thoughts?
no, my only experience with when you get involved with farmers dumping milk and farmers euthanizing market-ready hogs because they don't have a market, it always makes good press, and usually it seems to be a little more prevalent in the press than in the real life of the world. So maybe some of those euthanasian comments in May were overblown.
All right, thanks, guys. And looks like people have found the question box. There's more coming in here. So the next question is relating to the processing plant. Do you expect any fallout as far as plant labor situation is concerned from the ongoing headlines regarding some recent announcement of some OSHA fines on processing plants? So in other words, it's kind of a question around the labor on the processing side of the industry as we head into winter. Any of you care to comment on that?
Well, labor is a big deal at this point in time, no doubt about it. And the workers are worried about their safety with this coronavirus issue, and the working conditions in a plant is, you're pretty close to people, and they don't have time to build additions onto the plants and change 100-foot conveyors to 150-foot conveyors. I mean, it just isn't going to happen. Hasn't happened that quickly. So there's some risks involved. I think we're going to end up, as they took the $600 off of the table, that more people are going to come back to work, and it makes people nervous, but I think they'll be less nervous as we go forward. The other thing is we track every day, literally every day, what the death count is and how many new cases have been found. And we had a surge in the number of new cases of the coronavirus in July and August, and the death count didn't move up nearly as much. The medical, I've talked to some medical doctors, and they all tell me that they're learning how to treat people much better than they did in March and April. That's helped part of it. Part of it is that we recognize that some of the old people in homes and other things have to be really protected, and you've got to keep this virus away from them. And the young people that are getting infected with this seem to handle it much better. You have much fewer deaths on people that are 20 years old than you do on people that are 80 years old. So it's a changing environment. I think you're going to find that the packing house business will continue to do all right. The $18,000 or $13,000 fine that they hit Smithfield with in South Dakota, Smithfield's fighting it because they don't want a precedent to be set. It's a relatively small amount of money for the size of that plant, and we'll move forward. But I think OSHA is trying to make a point, and everybody wants workers protected. I mean, it's in management's best interest, and nobody wants to see people get sick. But we're in an industry that if the packing houses aren't there, people don't have meat to eat. I mean, it's just that simple, and the farmers don't have a place to get a paycheck as they bring their hogs to market. So it's an important industry, and the people in it are bright people. They're working on trying to find solutions as quickly as they can. And I have confidence that they'll be creative and we'll find those solutions as we move forward. That's it. Next.
Thanks much, Len. Kevin or Ron, any comment on the labor situation as we head into winter? Anything to add to Len's points?
And Lynn, said it very well. And, we talked earlier about relative cutout value to hog prices. When you get squeezed on cutout on slaughter capacity, as happened back in April and May, you get a wide spread. It's bad for everybody. Hog prices drop, so it's tough on producers, and retail prices go up. We have record retail prices for pork in grocery stores back in April and May, and so it costs consumers too. So, Lynn's right. Everybody wants help to see the processing plant workers healthy and able to go to work without worrying about coronavirus.
Thanks, Ron. Well, I've got another question here, and this is one that everybody's been asking all summer and into the fall. Steve Meyer, I'm going to start with you on this one. It's around how many hogs do you feel are backed up in the country now as you look at the June Hogs and Pigs report and this Hogs and Pigs report? Generally speaking, what would the math tell us? Has anybody run the numbers on that yet?
No. These three guys are your analysts today. They get to answer that. I'm just along for the ride. I'm just the eye candy here, guys. Come on now.
We're thinking about 1.5 million is roughly the area of magnitude.
Lynn, I have 1.46 million based on the June Hogs and Pigs survey at this point that are not accounted for in slaughter if they were growing at normal rates and if we had packing space to get them slaughtered. So that's the number I have out of the June Hogs and Pigs report. If this report is right, that number is going to go up dramatically over the next 2 months or for 3 months. You're not going to get a break in it until you get to December, really.
Yeah,
and then you've got to work through the backlog.
Yeah, I think Steve's caveats are very important ones here. These are hogs that are unaccounted for, I guess is the best way to characterize it, and no one's quite clear on what may have happened. I don't know, Ron or Kevin, have you done the math here? What do you think the numbers look like? And again, this is just using the USDA numbers. If you assume those as accurate, how does that play out?
Well,
I haven't calculated go ahead, Ron, I'm sorry.
Well, I was just going to say that if you look at the June, July, August numbers, 1.5 million, give or take, unaccounted for hogs, it says would appear to still be out on the farm. The other thing had make it even worse. We had hogs backed up coming into June based upon the revision USDA did not make big enough in my mind. So we backed up 1.5 million in the last 3 months, and you might find another 1.5 million that we had backed up according to the data anyway at the start of June. So there's a lot of hogs out there available that's going to need to be processed if USDA's market hog inventory numbers are right.
Kevin?
I don't have an estimate. I mean, I did at one point. I forgot what it was, what the backlog was, but I'd have to agree with Steve. The numbers in this report say that this backlog is growing, and it's going to get a lot bigger by the end of the year, assuming that it's actually there. But it's it's really difficult to try to predict. You know, they're backed up because growth rates have been slowed down, right? So at what point do producers on a large scale change that and start speeding up the growth rates and bringing them back to normal? You know, at what point does that happen? When it does, if these numbers are correct, if it does, then we got a big catharsis coming at some point here.
Thanks, Kevin. The next question is regarding sow slaughter. Any advice on how to interpret the USDA sow slaughter data up 12% year over year? Maybe another way of asking that is those sow slaughter numbers. I've heard comments from producers. Just curious, you know, were there some heavyweight market hogs in there earlier in the year when we had trouble in the packing plants, the federally inspected slaughter there? Any thoughts there on the sow slaughter data year over year?
I heard that same comment that, you know, some of these heavyweight hogs just went to the sow barns rather than the normal market hog path, and you know, it was better even at 20 cents a pound. It was better to sell a sow for 20 cents than it was to you know, euthanize it. So I don't know how much of that went on. I don't visit many sow barns, so I'm not, you know, market barns, and so I don't know for sure. But I heard that same comment, Bill, and it makes sense. It's logical. Farmers tend to be pretty logical when it comes to money.
Ron or Kevin?
There were what I call butcher hogs being slaughtered in sow plants. I think that those barrels and gilts probably wound up being classified as sows since they were being processed in sow plants. I'm not sure if that is still going on a large scale, but it was pretty common, pretty prevalent, you know, in May and June. But that still doesn't hide the fact that sow slaughter as a percentage of the breeding herd has been pretty high, and it's been consistent with the reduction in the breeding herd that we're looking at right now.
Thanks,
One thing
Kevin.
I'd add, Bill, is that sow slaughter has been up every week of this year. Year over year, it's been higher than a year ago. Yes, back April, May, we were probably pushing some big bears and gilts through sow plants, but unless that's started back in January, because the last week we were down in hog slaughter was in December. I mean, down in sow slaughter year over year was December. So I think the sow slaughter data reflects tough economic times and producers scaling back. The question is, you know, how many gilts have been put on farm to offset the smaller herd of old sows.
Yeah, thanks, Ron. And the next question, follow up on that, feeds right from your comments there. And you know, certainly as producers are culling, they're gonna cull the older sows or the underperforming sows. So maybe this question is related to, as you look at productivity improvement, as we talked earlier about, you know, pigs per sow per year. Any sense if we're going to start increasing that productivity output here in the U.S. because the sow slaughter is up and we've essentially culled the older and poorer doing hogs? What's that trend line look like on productivity to you guys? We talking hockey stick or slight incremental improvement?
This report is the first time since 2014 that the pigs per litter has gone down. So, you know, they don't seem to be getting more efficient if somebody's selecting the bad sows poorly.
Well, on that, Kevin, I think probably the question is, was there more aggressive culling maybe early on in the year as producers were faced with perhaps having to perhaps euthanize or emergency depopulate heavyweight hogs? is this number reflecting maybe more aggressive culling in the industry as well? Any thoughts on that?
Yeah, I do believe it reflects a closer culling rate, and the older sows with more parities on them. They're like consultants, they're the first ones you get rid of when time gets hard. And I have no doubt that went on, that was taking place. But as far as the pigs per litter goes, it was the change from spring to summer was not normal. It was pigs per litter number was was kind of depressed in the summer, but that's got to reflect to whatever extent there were destruction of baby pigs that would be reflected in the pigs per litter number in the summer, and I think that accounts for it. Otherwise, as best I can tell, trying to keep up with industry trends as best I can, productivity has a long way to go up yet. A lot of improvement to be made. I mean, just look at what their performance is like in Europe, for example. I'm told that productivity just keeps increasing.
Thanks, Kevin. Sticking with the theme of the sow inventory and the sow slaughter numbers, and I don't have the report in front of me, so you guys will have to look. This was looking at third quarter and fourth quarter sow numbers. So the question is this: with the large sow kills liquidation that we sense is happening, how do the Q3 and Q4 report sow numbers remain unchanged?
But
Just a point of information.
I don't know if I understand the question.
Yeah, the point of information, Bill, the breeding herd in September 1 of this year was 6,333. In June, it was 6,326. So it actually went up a bit. I would point out that there are very strong seasonal patterns in the breeding herd. So.
Good point. Thanks, Steve. Here's one that's going to also get into some numbers here, so I'll read it twice. The person asks, maybe I missed this, but if we actually have 9.85% more hogs at 180 pounds and over, last week's harvest year-over-year basis should have been 2.84 million, yet the cash market rallied. Not quite sure how to interpret this question, but I guess they're looking at the 180 pound weights according to this report today, and yet seeing how the cash market has performed. Any sense? And I think this is probably a question going back to how accurate do we feel those over 180 pound weights are in this report? So I'll open that up to you, gentlemen.
That person that asked the question is the same thing that we've been talking in our office for a while. It just doesn't match up. There's some difference on reality, and some people explain it that the hog producers have been very good at adjusting the diets to slow everything down, and we're having trouble buying into that story. But so maybe I'm not the right one to be talking here.
Yeah, I agree, Lynn. With the kind of dramatic, we've had a dramatic rally in the hog prices, and it didn't start yesterday. It's been going on a while. That seems to me like, with that that's pretty strong incentive to pull the hogs that have been slowed down, to pull them out. I mean, if it doesn't happen now, what kind of an incentive is required?
If you look at the weight, you'd say they're pulling them forward, Kevin.
Yeah. Which is what backs up the notion that these inventory estimates up 9% or 10% are suspect.
If we were in normal times, we'd look at the situation and say, slaughter weights have been down. Iowa, Minnesota weekly weight series has been down for the last 4 weeks. That hadn't been down since back in March, I think. So it's down. Prices are rallying at a time of year when they're normally going down. Under normal circumstances, we'd say what Lynn said. We're pulling ahead on hogs. That's what it feels like is going on in the last few days. And then you look at the USDA's number, 180 pounds and up 9.8%. We're halfway through that period. We're going to have to make those numbers match up in normal historical relationship. We're going to have 20% increase in hog slaughter the next several weeks to be able to do the kind of math we normally did. So it's clear that COVID has given us a tough situation, and it means these numbers may not mean quite what we thought they meant usually.
Thanks, Ron. And as we're winding down our time allotted here, there's one other question I'll put into the mix. And it was really thanks for you guys for running through your forecast hog prices, your projections earlier. And the question is, how confident do you feel in some of these higher numbers in Q4 and Q1 when you look at prices vis-a-vis this USDA report? So essentially, folks are asking you, how much confidence do you have in your price projections, I guess, what they're asking.
Well, I'll tell you, when Kevin and I have very similar price projections, everybody should be nervous.
That's right. Amen.
There's an enormous amount of uncertainty in prices and in the markets on how many hogs we've gone out there and packers' capacity to process them on a timely basis. So there's just a lot of risk out there. And I don't recommend hedging all that, but it's for the last couple of years with the kind of uncertainty we've had in markets and the fluctuation. Looking at pricing some of your forward production off of the futures market may continue. It's been a good strategy for a couple of years now, and it may still be the case going forward.
All right, with that, Ron, we'll give you the last word here this afternoon. Certainly want to thank our four folks on the call, Steve Meyer, Len Steiner, Kevin Bost, and Ron Plain for joining us here today. And reminder again that this is information meant to help inform producers. It's not marketing advice or direction, and so please don't take it that way. And on behalf of the National Pork Board and the Pork Checkoff, we wish you a good Thursday afternoon and a good, successful, and safe fall and fall harvest. Thanks much for all of your attendance, and we'll talk to you later. Goodbye.
Yeah.
Okay.